So Bitcoin has finally seen a nice relief rally on the last trading day of the month as it continues to break away from its US market correlation. In today's market open, the S&P 500 and Dow Jones both dropped 1%. Now, meanwhile, while all that was happening, Bitcoin went ahead and broke through some key resistance levels and was up 4% in the past 24 hours. And in this video, we'll be talking about Bitcoin's recent price action, talk about whether or not this relief rally is here to stay. And we'll also be talking about some of our June predictions, as well as Terra Luna pumping nearly 80% in just 24 hours. Now, like the usual, if you guys are enjoying these daily market updates, be sure to like this video down below, subscribe if you haven't done so already. And with that being said, let's hop into the computer and see what's going on in the market for today. So the crypto market saw an unexpected comeback yesterday, where we even had Bitcoin go up about 4%. And even in today's 24-hour percent increase, we're seeing about an 8.81% increase in the last 7 days. Looking at our 4-hour Bitcoin chart, we can see that for about 4 candlesticks, Bitcoin was going above and below that key resistance level of $30,700. It even at one point had broken above the 100 EMA, which is the yellow line, for the first time since May 5th, and then held that level of support in the following candles. On that 5th candlestick, Bitcoin broke that $30,700 resistance level, which is the orange line, and shot up 5.6% in 4 hours and reached a daily high of $32,250. The chart found resistance at the 200 EMA, or the purple line, right after that, and has been consolidating since then. Keep in mind that 200 EMA is going to be the next key resistance level for Bitcoin to break on the 4-hour chart. Bitcoin could drop back down and retest that $30,700 price level at some point this week, but if that price does hold, then that could confirm it as the new level of support. Now, on the off chance it does the opposite and the price falls below that, then this would suggest that the recent move was just a false breakout. And if this happens, we would want Bitcoin to at least hold the 100 EMA and claim that as a reliable support level. Now, before you YOLO back into Bitcoin, wait for the charts to confirm whether or not this breakout was indeed true, whether it's healthy, or if it could be a fake out. Now, despite the second day of more bullish momentum, this still fails to impress other analysts who are still a bit more bearish within the market. With Bitcoin's fresh gains into the last day of May, the monthly candlestick is set to close at a loss of around 16% at the time of filming this video. All in all, if we do refresh the Crypto Fear and Greed Index, we are actually returning back to somewhat better levels than we've experienced within the past few weeks, which is sitting at a 16 for the time of filming this video. Now, going into the top altcoins within the market, you're actually going to notice that Ethereum is continuing to ride back up. So it looks like if anyone did dollar cost average and buy up at any point last week, you would be up on your investment, because for a majority of the time, Ethereum was trading around $1,800, and closely now it is up towards $2,000 today. We even have other altcoins like Cardano up about 13.25%, or nearly up about 17% for the week. We still have Solana not doing too much, actually about down in the last 7 days, still sitting at $45, but other altcoins having mixed sentiment and growth even today. Now, on the more extreme end of that, we have Kava up about 19%, HOT up about 19%, Waves up 19%, Axie Infinity up 16%. But if we go into the top losers, we have Monero still down about 4%, Tron down about 2%, Ethereum down about 2% too. Now, the big things to note here before we go into some of our headlines is the fact that regardless of whether or not this is indeed the start to the next relief rally, and whether or not this may last a few days, a few weeks, or it could last a while, it could last a month or two, even whenever we're able to see this type of separation happening within stocks and crypto is always a good sign. The past few weeks have been tough just because there isn't too much excitement happening within these markets when everything seems to be going down. If stocks go down but crypto happens to go up, this here is that decoupling effect that we've been waiting for and talking about for the past few months. Decoupling is so important because it will separate crypto as another alternative asset, and it won't put this in a classification where even stocks, which is still known to be a much more riskier asset compared to some of the more conservative investments, such as even putting your money into precious metals like gold or buying up bonds. This here could prove that it could be the next asset class that still grows regardless of whatever's happening in terms of macroeconomic conditions and what other alternative methods of investments could be. Now, I do think even with a little bit of green happening within the market, I don't think this should be the full signal of FOMOing back in, just because this is not yet the confirmation that a lot of people I myself included, are still expecting to see. I would start entering the market when we get clear confirmation that we are back in a bull market, and I wouldn't confuse this with FOMOing back in. It's just trading based off of momentum, but it's also about seeing when that momentum really starts. If you were to invest back in just because you see about 2% green in the market and then we continue to slide back down even further, obviously that would risk you losing even more additional capital. In order to make sure you're still making money in this market but moving cautiously, it's all about making good strategic decisions without getting your emotions caught up in it. For that, it even is as easy as just making sure you have certain price limits that are already set in, or you're averaging in regardless of what's happening in the market. Now, I do think that even with a lot of the top altcoins, we still have not yet seen the absolute bottom. I do think that there are going to be even more buying opportunities, even if the market continues trading flat. So even right now, while things have gone down significantly, it doesn't mean that we can't even see the prices of these assets going down even further. Now, a lot of people within the crypto space will preach to their audience like, go ham, go crazy, risk your money, use leverage, this. I think in most cases, rather than not, especially if you're a newer investor, it is okay to be conservative. It's okay to be holding on to more cash at this moment, and it's okay to be cautious about your trades. Don't force yourself to make a trade. Don't force yourself to do anything that you're uncomfortable with. Just make sure that you are still involved within the space, doing your research and knowing that opportunities will be coming up. Now, going into some of the next headlines, as mentioned in yesterday's video, Terra 2.0 launched and had a successful start to their trading this past Saturday. So multiple exchanges supported the airdrop for Luna holders and allowed trading for the new token immediately. Binance, the leading exchange by trading volume, announced that they would allow Luna trading starting today, May 31st, and as expected, Luna had some insane volatile price action. At one point, we saw this asset skyrocketing to $20 to $30 on some platforms before declining back down to $4. Now, the price of Terra Luna briefly spiked around 90% overnight to an intraday high of over $11 ahead of Binance's airdrop, but then it dropped back down to 7.5 or $7.50 a few hours later. Once Binance launched the airdrop campaign at 2 a.m. Eastern time this morning, it had opened trading for Luna on its platform, and Luna experienced more volatile price action for several more hours. Now, in this hourly chart, the yellow arrow is pointing to the candlestick when Luna began trading on Binance, and as you can tell, within the next 6 hours, the price just surged and it went higher and higher. This blue highlighted box is actually showing a surge of 40% to about $10.50. And something that I found pretty interesting is just the fact that the volume bars started from that yellow arrows are pretty consistent to the hours before Binance went ahead and launched their Luna campaign. Now, I would have expected to also see a bit more higher volume just because of the sheer amount of traders being on Binance's platform. But keep in mind, just us being in this rather bear market and Luna being a crypto that not many people are going to want to take their chances with, I think it really does make sense on why we saw the amount of activity that we did. Keep in mind, guys, anytime we get spikes of volume just like this within the crypto market, we see this happening so often. This is going to be one of the trading strategies to be aware of, which is buying the rumor and selling the news. You can take advantage of it, or as an investor, you can be careful knowing that could be lying ahead. Now, on top of that, with regards to Terra Luna, there was actually an error in the pricing software for Terra Classic validators, opening the door for hackers to drain 4 asset pools from the Mirror protocol. So I saw this earlier today on Twitter. For anyone who doesn't know, Mirror protocol pretty much essentially enables users to create and trade mirrored assets, also known as M assets, that mirror or are closely tied to the price of stocks, as the name suggests. Now, somewhere in this, there was actually a bug in the coding that created a pricing error, and the validators on Terra Classic reported that the price of Luna C was at 0.000012 cents. It was just ridiculous. The reason why this is significant is because during the same time, the actual price of Terra Luna was about $9.32. Now, because of this incorrect calculation with over $1,000 worth of Luna, hackers would be able to quickly get $1.3 million in collateral while its real value was significantly lower. As a result of this exploit, there's a hacker that was able to buy METH at around a 97% discount and went ahead and drained the entire pool. And after after 12 hours from the first drainage, the hacker attacked other assets and ended up also draining the MBTC and 2 other pools within the protocol. Now, thanks to the developers, Mirror was saved by closing MBTC, METH, and MGalaxy and MDOT using it as collateral, which then put a hard brake on the hacker's intention to drain the remaining pools. Now, according to rumors over on crypto Twitter, the root cause was that Terra Classic validators were running an outdated version of the Oracle software. We have this one tweet by Chainlink God, which stated, Mirror Protocol has just been exploited again due to Terra Classic validators reporting the price of the new Terra 2.0 Luna coin at what we just mentioned. And then he also stated that this is a massive operations failure. Now, on top of that, it was a little bit more bad news, even on top of all that happening with Terra Luna. It just seems to be a negative orb of energy. But on Twitter, numerous investors were claiming that their Luna airdrop was much less than they expected. Luna head and responded on Twitter, we are aware that some received less Luna from the airdrop than expected and are actively working on a solution, and more information will be provided when we have gathered all of the data, so stay tuned. Now, despite what happened to Terra's UST algorithmic stablecoin, another alternative that emerged earlier in May is also starting to catch fire, and this is going to be TRON. So TRON's blockchain is now gaining some serious traction as its total value locked has soared to $6 billion, and the market cap has actually gone up to its algorithmic stablecoin of USDD, which expanded to more than $600 million. So in the past month, if you haven't heard about this, TRON, just keep your eye out, keep your ears unfolded. Oh, generally everyone's ear is unfolded. Y'all know what I mean. In the past month, the amount of funds locked on TRON has increased by 44.74% and 14% in the past week. So this is all happening while the total amount of funds locked in other blockchains has dropped from 30 to even 70%. Currently, TRON TVL has surpassed Avalanche, Solana, and Polygon, and is currently the 3rd largest chain after Ethereum and Binance. So the whole ordeal going on with TRON is just the fact that we could be seeing another algorithmic stablecoin called USDD, or the JST protocol, which kind of results into what we experienced recently with the Terra Luna crash. Now, on the contrary, some analysts believe that USDD, which is an algorithmic stablecoin, and its network are in a completely different state right now, and that the TRON-based algorithmic stablecoin is mainly supported by insiders. What this means is that there could be room for retail and outside investors to adopt USDD, and with insiders being a majority of the holders for it, there's even more room for this to grow. But at the same time, there's always going to be some type of risk that I believe comes with these algorithmic stablecoins, especially if we're not sure of how they are backing those assets. Now, anytime we get algorithmic stablecoins, one of the reasons why people tend to put their money in there is because you get some pretty juicy APYs. You'll be able to earn good amount of interest, and that is exactly what we saw with Terra Luna's coin, and then what we had with Anchor Protocol, where you can earn 20% APY, which was supposed to be a very risk-free alternative way of being able to earn money within this market. But I will say, ladies and gents, please be careful within the crypto space. Now, keep in mind, ladies and gents, that even within a market climate just like this, there will always be risk. Many people thought Terra Luna would never be able to crash. Some people thought, algorithmic stablecoins were the future, and then we saw it literally doing the opposite. Now, in terms of free crypto news, because I don't know, I think it's just cool anytime we hear a story like this too, and it's a little bit informative. So the city of Shenzhen went ahead and airdropped 30 million in free digital yuan to stimulate consumer spending. So the airdrop here is a joint effort between the city of Shenzhen and Maitin Daiping. I definitely said that wrong. Forgive me, and China's leading food delivery app. Now, Shenzhen authorities will also cooperate with several major banks to distribute the digital currencies in the form of red envelopes through a lottery process to its residents. As we've heard before in the past, where China is not a fan of crypto, crypto's a scam, it bans mining. We then have China stepping in and being the communist country that it is, it's now trying to use and push its CBDC, or its central bank cryptocurrency, onto their people. Now, the government has also introduced a series of pilot programs to incentivize users to pay via digital currency. Last month, the country's central bank added nearly a dozen new cities to the existing 10 major pilot cities to test the use of eCNY. Now, in my opinion, I think China is just secretly trying to be one of the first leaders within the entire world of being able to use crypto dominantly. At the same time, crypto is shown to be democratic. It's shown to be more freedom-based, where we're not controlled by other singular entities. And I believe China understands this. And what they're trying to do next is really just control the entire flow. That is going to be having their own stablecoin and having their own cryptocurrencies and forcing their people to use this primarily. Now, only time will tell what exactly plans out with this major country, but it should at least give you a signal that when other countries are doing a massive airdrop of 30 million, and then we get even more additional news just talking about their citizens getting forced to use their own central bank currencies, we should get an idea that crypto is significant. Crypto is here to stay, and we are going to see continued developments happening within other countries for the next few years, and even, I think, going into our lifetime. If we were trying to make an investment during some of the most rough times within the market, and then you have a span of 5 to 10 years of a hold time, are stocks and other investment assets going to be something that completely just revolutionizes the world compared to where crypto is literally going from industry to industry with other parts of its technology actually making a difference? Anything that does have a major upside usually follows with more risk. So keep in mind, I would never recommend anyone to be YOLOing all their money into just, one asset class or even one cryptocurrency. Have diversity within your portfolio, whether it's other investments, whether it's physical assets, whether it's stocks, the indexes with crypto, stablecoins, DeFi, NFTs. Just spread it out. Have a portfolio pie where you're able to look at it and be like, okay, if one asset class happens to not do well, maybe it's play to earn games that take a little bit longer for it to do better. You still have these other asset classes where if the market does resume a bull rally, you will be ready and you'll still be going up in value. And hopefully those assets will outweigh any type of losses you may incur with other assets. Now, guys, that is going to be today's update. I got a quick message from today's sponsor. So nothing new, but we actually have FTX linked down below in the description. And for anyone who actually hasn't heard, by any reason possible, FTX is one of the largest cryptocurrency exchanges in the entire world. And you can trade crypto on FTX with up to 85% lower fees than their top competitors. You also get no fixed minimum fees, no ACH transaction fees, and you can also set up reoccurring buys, making dollar cost averaging, buying up this dip really easy. Make sure to head down below and use my code JUNK to sign up, and you can also find yourself earning up to $100 just by trading with your account. On top of that, if you're not ready for crypto, they are coming out with a stock exchange platform as well. And if you are trying to diversify like we preach on this channel, you can do this all in one account, so you don't have to get your taxes mixed up and you don't have to have 10 different exchanges. You can all have it just in one. Now, like the usual, if you have not done so already, don't forget to follow me over on Twitter and my Instagram. And if you do follow me, please watch out for the impersonators and scammers. On top of that, we also have a private Discord group where you can get access to my buy and sell alerts, technical analysis from some of our best advisors, as well as access to a community of other investors with a Patreon link down below. Now, one more thing, I usually do a secret code word. For me personally, guys, I started cutting season like a few weeks ago. It's been rough. I've been working out a bit more, trying to get back into the gym, trying to eat a lot more healthy. So, in honor of the cutting season, let me know if you guys are doing that down below too. I read a lot of the comments. The secret code word for today, though, is going to be cut. Comment that down below if you guys made it to the end. Like the usual, have an amazing day, and I'll see y'all soon. Peace.